Hi everyone, welcome back to Chapter 10. Illustration 10-6 in your textbook is an excellent example of calculating the cost of a natural resource, including restoration costs and the related asset retirement obligation. The Jackson Mining Company paid $1 million for the right to explore for a coal deposit on 500 acres of land in Pennsylvania. Costs of exploring for the coal deposit totaled $800,000, and intangible development costs incurred in digging and erecting the mine shaft were $500,000. In addition, Jackson purchased new excavation equipment for the project at a cost of $600,000. After the coal is removed from the site, the equipment will be sold. Jackson is required by its contract to restore the land to a condition suitable for recreational use after it extracts the coal. The company has provided the following three cash flow possibilities for the restoration costs to be paid in 3 years later after the extraction process is completed. The company estimates that there's a 30% probability that $500,000 will have to be paid for these restoration costs. There's a 50% probability that $600,000 will have to be paid for these restoration costs. And there's a 20% probability that $700,000 will have to be paid for these restoration costs. Additional information that we'll need is that the company's credit-adjusted risk-free interest rate is 8%. First, calculate the expected cash outflow for restoration costs by multiplying the probability percentages times the dollar amounts given. In this example, the expected cash outflow for restoration costs is $590,000, calculated by multiplying $500,000 times 30%, plus $600,000 times 50%, plus $700,000 times 20%. Then find the present value of the expected cash outflows. The illustration tells us that the company will pay the restoration costs in 3 years. So, calculating the present value, N equals 3. The illustration also tells us that the company's credit-adjusted risk-free interest rate is 8%. So I equals 8%. Therefore, the present value of the $590,000 expected cash outflow for restoration costs is $468,360, and that is the amount capitalized to the cost of the coal deposit for restoration costs. And that is also the initial amount in the asset retirement liability account. Therefore, the total capitalized cost of the coal deposit is $2,768,360, which is the total of the purchase of rights for $1 million, $800,000 paid for exploration costs, $500,000 paid for development costs, and the present value of restoration costs that will be paid 3 years later of $468,360. Notice the journal entry. Debit coal mine, which is an asset and a natural resource, $2,768,360. Credit cash for the $2,300,000 paid for the rights to explore, the exploration costs, and the development costs, and then credit the asset retirement liability account for $468,360. Do you remember that in this illustration, Jackson purchased excavation equipment for $600,000? We record the purchase of the excavation equipment in a separate journal entry. Debit excavation equipment, $600,000. Credit cash, $600,000. Let's continue with our Chapter 10 scavenger hunt. The scavenger hunt bonus phrase for this video is, what fun or relaxing plans? Well, that's all for this video. In the next video, we'll continue our discussion of illustration 10-6 in your textbook.